Okay, guys, I'm going to update you on the Vanguard account because it's the last weekend of the month and I'm on holiday next week. Woohoo! And I'll show you the little account as well, just to give you some inspiration. And, well, I'll show you my Darwin account as well. So let's roll the intro, tell you all about it.
Matron, take them away.
And a warm welcome to one and all. It's your first time here. I'm the big fella Scruff. And what I'm trying to do is put trading in the real world. Maybe show you a trick or two along the way. So if that sounds good, hit the subscribe button, all that good stuff, and we'll get into it. So what am I doing and why am I showing you this? Well, it's not bragging rights or anything. It's really just something I do for the squad to update them on progress. Because if you're talking about something, you should really be able to back it up. And that's what I do, you know. And it's not, like I say, to show off. When you see me trading, it's not to show off. It's really just to inspire you that it can be done. You should take any of it with a pinch of salt. Because there's only one set of metrics that matter. Your own.
Are you serious?
Doesn't matter what anybody's doing. I can look at Richard Branson and aspire to be a billionaire on my own Caribbean island in the middle of nowhere. It's something to work towards.
I have a dream.
But reality is what I bring to the table. It's what I personally do. And that's what this is. Okay. So let me quickly show you something. I am, as I said, at the end of the month and I'm going on holiday and I'm going to be on this bad boy here. I'm looking forward to this.
Suitcases, honey, are we going on a trip?
Going on that ship next week, having a week away, and I might actually take my laptop with me, do a bit of work. But one of the beauties of going on a ship, which is why I've kind of taken that, is the freedom. You can't contact me. So I actually have time to unwind and step back. And I did have a question asked the other day. Should you be trading 7 days a week?
Nope.
Because you can. If you go on the 5%ers and if you want to try them, there's a link below and you get 5% off with them. You can trade 7 days a week quite well because of the cryptocurrencies they've brought in. Would I advise it? No. You need a break. And that's what this ship is. That's me taking a break.
Good job.
But what I've also been doing recently, I was asked to look at Darwin. Now this is, and I'm kind of showing it because it's third party. Can't be manipulated. What you see is what you get. Now, there's something like 40,000 traders for them and they rank the top 6,000. Currently they're ranking the top 100 or 130. And I'm ranked 554th. So if I'm in the top 1,000, I'm more than happy. You know, it's top 10%. That suits me down to the ground. As it's come forward, you can see it's got a decent growth rate. I need an allocation of 75 to get your seed money. Well, I'm at 76, so that's good. Can live with all of that. And if we pull this right down, you'll see some stats as to products that I take, etc., etc. So come all the way down. Where are we at? Let me find it. Assets and timeframes. There we go. So over the course of the last month, I've taken 182 trades with Forex, 96% win rate, with a decent return across 9 different pairs. And if I flick it over onto indices, I took 58 trades, 91% hit rate. And that was solely on the DAX, by the way, guys. So I'm quite pleased with this, you know, because it is third party. Can't be manipulated. And what you see is what you get. If you have 1 or 2 trades and think you're a hero, brilliant. But you trade 182 times and you get it right. I think that says a lot. And that's why I'm running into the small account. Now, the small account is this one. And this is kind of one of the cruxes to where I build the Vanguard up from. And you'll see the Vanguard. You see me do this one about a year ago. And I built one up so that I could buy a prop fund. And then the money from the prop fund was siphoned over into the Vanguard. And the Vanguard is built right up. It has jumped up a lot this month because I've been that pleased with it. You know, I trade different pots for pensions and one thing and another, and I have assets elsewhere. I've started to liquidize them and put them in the single pot. So instead of having bits and pieces, they're all in a singular place. And I've split the Vanguard into a long-term horizon of pension, where I'm not going to touch it for about 10 years, and then money going into an ISA. So if I want something, I've got a lump of money I can draw on, because I might want another luxury holiday or a fancy car. I don't know, but it can be there and building up in the background. Now, this one we started as a group event for the Discord, and we all decided that we would go with Black Bull. I'll just pull up the Black Bull account so you can see the type of account that we trade with. Just let me pull this down. So this is on our MT5, and we chose this one because it can mirror our prop, what we use with Darwin X, as I've just shown you, because that's an MT5 platform, and our 5% as prop firm because it's MT5, and you're almost looking at the same thing all the time, training your eyes to the same assets.
Isn't that logical?
And then it means you can trade along together. Now, there you go, same number. But here's the bit I want to show you. It's just $1. But why $1? Well, it's very simple. If I flick this back over into here, this is the first month that started on the 8th. My day target in order to achieve a 10% growth this month was 92p. So I only needed to do what I needed to do, and then I put a set of rules in to stick to. I'm going to trade between 6 a.m. and 5 p.m. I'm going to trade once a day at a given time. I'm going to look at 5 assets: cable, euro, gold, oil, DAX. I can't afford to trade oil and DAX on this particular account. They're too expensive. I have to build it up. I'm going to look at certain strategies. If I'm going to scalp it, I'm going to look at a push. If I think the trade will last more than 2 or 3 hours, I'll look at GoldenEye. And if I look at the trade and I think it'll run overnight, I'll look at the river. And I'm looking for a baseline of 10 pips on every trade, or 10 points, whatever you want to call it. And I've just done that once a day. And the time that I've chosen is between 7 and 8 o'clock in the morning, so I can get that early morning push. And at the moment, I'm just trading at 10p's. Now, I can go in twice if I want, split it up to the value at 20 pence. So it's 2 positions. I'm investing 5% of the account because I have to. I've got no other option because I need to let it breathe. Because if I go in at sort of 2 quid or 2%, I'll have no room to play with. So 5% I'm quite comfortable with. But it never gets there. It's just a guide. So everything is in place, and up here tells me the targets that I'm after, and I'm well ahead of target. I don't have to do anything next week, hence the video, because today is my last trading day till I come back off holiday. I'm happy with this. And then we go to Vanguard, which is kind of where I want to take this to. So if I pull in Vanguard, let me just log in, and I'll... Why Vanguard? What do we offer? Right, okay. And I'm going to show you something, because Vanguard's changed slightly this year. And it's something to keep an eye on, actually, because they've added some extra funds and changed some funds from distribution to accumulation. Now, personally, I like accumulation. I'm going to be changing my funds round a little bit, and I'm going to kind of explain why. Now, one of those accumulation points, if you put it into the USA, has been this one, the 500 ETF. Now, I've just recently sold all of this, okay? Now, if we look at the fund details, you'll see there's now 2 buttons up here where there never used to be. Okay, there used to be like the income version and and now they've added the accumulation. What it means is any dividends, interest, etc. will be paid back into the fund without me having to turn it into cash and then save up enough to buy a unit. It will just automatically go back to fund. So it'll be very passive in its way it's being traded. And what I'm looking at, I look for between 5 and 7 for a risk factor. It's 6. And I also want an index, passive. I just want it to move along. All right. So they're the changes. And I'm still going to buy into this. But I've taken the bulk of the money out and I'm putting it into an all cap. Now there's some different types of all cap. Now let me just kind of show you that. And then you'll see what I'm going to be selling into. So again, look at a global. So you click this, and this is just kind of to show you before I kind of reveal how big the fund is at this moment in time. There's 44 funds. Now you can automatically start writing some of these off. Now I do use 2 life strategies. I use a 60 and an 80 because what they are passive for protection. The bond market very rarely loses money. It's pretty stable. Now, these life strategy products, they have a mix between stocks and bonds. So it's like, in this case, 80% stocks, 20% bonds. And I'm moving more towards the 60 because then it's kind of flatlines. And you can kind of see that here. You know, it's relatively stable in its interest, in its returns. Whereas this one's a little bit, it's 18, it's down to 7, up to 14, down. Whereas this is pretty flat. I like that. I like that for a safe haven. Now, as we come down, I don't look at any of the retirement funds. We come into the global indexes. And there's some new ones that are coming in, which are quite interesting. Now, the one that I've always been using of recent is this one. Now, if we go to look at it, to what the fund details are, you'll see it's got 7,108 stocks. So that's massive fund. And it's got a risk of 5. So it's not that bad either. And the cost is only 0.23. Costs next to nothing to run this account. Okay. And you can now put it back into accumulation. So again, you don't have to do anything. Put the money in, all your dividends, etc. Go straight back to fund. Excellent. But there's another one of these. And it never used to be available, but it's just come in. And it is the ETF version of it. So if we pull this up, this one here. Now, the difference between them, when you look at them, is the amount of stocks that's involved. This has 3,667 stocks. It is slightly cheaper on the fees, but for the 0.1, it's neither here nor there. Doesn't really matter that much, and it's a little bit more risky. I was going to use this, but when I've been looking at it, I think it's a coin toss, and I'm going to be deciding this weekend between this one and the other one. But I'm more weighted to the bigger one, where it has more stocks. And I'll tell you for why. There's an old saying, don't look for the needle, buy the haystack. It's a bigger haystack. It'll flatten things out. Okay. So it's still a good market, it's still good to invest in, etc. But I'm kind of liking the other one. And that's what I'll be doing for the next quarter. So I'll be looking at the performances, having a good work through, make certain all of this is fine. Look at the growth. As you can see, the growth is quite good. These are the things that I look at. And then when I come down into my account.
Well, we're waiting.
Okay, guys, here we are. I've opened into the account. Didn't really want to show you my passwords, etc. Obviously. this portfolio is now £72,500. And I'll be adding more into this because I've got a couple of other things that I might liquidate and put in here as well. And I'm adding into it on average around £500 a month. So this over the next 10 years would be quite nice. Now, if I look at the investments to what I'm looking at, you'll see the S&P has disappeared. Now, the S&P has disappeared because I've sold it. I've put it all into cash at the moment. And what I'm going to be doing is splitting these up. I want a flat line, which is the 60. So I'm going to put what's left of the 80 into the 60. The global market, I only put about 10% of the money that I put into this into that. And it's really there as the wild card. Because with emerging markets, they could accelerate massively. And if they accelerate massively, well, I'm onto a winner. But they could also tank, so I don't want to put a lot of money into it. Then I put a lot of money into the global. This is the one with the 7,000 odd stocks into it. And it seems to be the one that I like the best. So I'm looking at that. And then I'm having to decide whether or not I'm going to just dump that into there or I'm going to dump this into here. Need to do a little bit of digging onto that one. Okay. Now, when it comes to the S&P 500, I'll kind of show you why I changed it. Oh, no. There's trouble. She's happy. Because she's got a bear. Show everybody your bear. Oh, happy are you? She hasn't been very well, and bought her a hot water blanket, or whatever they're called. Hot water bucket.
Bottle.
Aye, one of them as well. Well, I'm pretty sure you'd figure out what a bottle is. It's normally an alcoholic bottle. Anyway, let me show you this S&P 500 for just a second. Now, the S&P 500 on IG comes up as the Vanguard 500 GB. Okay. Now, if I just pull this up, or at least I will do in just a second.
Hurry up, hurry up, hurry up. I'm hurrying.
There it is there. Okay. So if I come up here into the search bar, type in Vanguard. That is there. The ETF GB. This is the same ticker. So I can plot what's going on with this. Now, there's a few things that I want to pay attention to. This is running at all-time highs, massively high. Okay. Take it down into a weekly. What I want to start seeing is this coming or close to any key turning points? Now, there is a way you can work this out. You look for the last strong directional drive that's complete, which happens to be here. Now, if that's the case, I want to put an extension on it. Pull that up, pull that down, and it'll give me a baseline, two baselines. Got one here and one directly above. This zone is a danger zone because it can turn at any time. Now, when the market does turn, it can drop down significantly, quite far. And it's done it a few times, here and here. Now, yes, they are weekly, but it's the difference between giving a certain percentage of your money away and not. So what I've done is I decided to sell it all off, but still buy into it each month, for as it goes down, it can accumulate and then be buying when it comes back up. I'm not having to weather all of this loss. It's safe in the bonds account. Now, if I know that's what the checkpoint is on the weekly and it's in a danger zone, I can look at this and start figuring things out. Well, what we can see, it's surged, but it is red and it's coming down. And again, we're looking for the last completed move in the direction it's going in. Well, this move's still moving. It will be here. Strong directional move, and then it collapsed back to where it came from. So, what does it have to say for itself? Well, it started there, came up, got up as high as there, down to there, Wow. No, oops, shit. Give us a second. Just caught that off guard a second. Moved it. Let's put that back into place. There we go. Fixed it, boys and girls. Fixed it. Let me just put some more baselines in, because the 127 and a 161 are key turning points. So I'm just going to turn that black. This move here has identified the same area on the chart. And look at the compression points to the pip. Boom, boom. So it's really pushing through this. This is really stretch market. So that can come back into this area. And I'm just going to capitalize on getting that to then move forward. Different type of strategy, different way of looking at things. You can't do it every day. You've got to do it maybe once a quarter, once a month. We've just come through the end of the quarter, and this month is when I'm making my decisions. And that's what I'm doing. And then the proof in the pudding is working out what you're doing. 72,500 quid. Just by watching what I do, where I buy, and what I put it into. Now, if I pull in a compounding calculator, just to give you an idea of what this may achieve for you. So that's 72637. So 72637 on a pound. On average, I'm putting £500 a month into this. I will be increasing that, but we'll do it on the low point. So we're looking at a yearly interest. Now, let's just say this isn't doing as well. On average, the S&P pulls in 10%, 9-10%. The stock market definitely does. So I'm going to play this down and assume I'm only going to get 8% a year, which isn't out of possibility. Okay, so it's 8%. If I run this for 15 years to my retirement, which is there, we're going to be adding in contributions of 500 per month, but we're not going to be putting any extras in. That would it. Calculate. That pot, if I work hard and I maintain what's going on, and it pulls in the percentage that we've asked, will be worth 415,000. I don't think that is too bad for cutting back on a bit of coffee, putting in the odd sort of money from a trading pot. You know, you don't have to hold all your money in your trading account, guys. You can put it into a slush fund like that, and it builds up in the background, and then you've always got your money to play with. So the idea of this was just to inspire you. If you're stuck, very easy found. I'm not a financial advisor. It's just something that I do. And this is really just to show what the fruits of your hard work can be done. And every account that you've seen there can't be manipulated. What you see is what you get. And that's about as fair as it gets. So as always, guys, trade well, keep your risk managed. But above all, do what you love, and the money will follow. See you all in the next one.